Recently, the State Council unveiled 33 measures covering 6 areas to stabilize the country's economy. Financial measures are a major part of the support policies. By the end of April, the growth rate of M2, or a broad measure of money supply, reached over 10%. Officials say this shows that China's financial support to the real economy continues to be strong and effective.
We focus on several principles. While stabilizing economic growth, we take into account the long-term development of the economy as well. Our efforts are also aimed at stabilizing employment, consumer prices, and the balance of international payments. We will also guide financial institutions to adhere to market-oriented principles and operate prudently to prevent financial risks.
However, the growth of total social financing has been lower than market expectations. In April, the growth in social financing was around 910 billion yuan, or about 136 billion US dollars. There was around 947 billion yuan, or about 141 billion US dollars less than the same period a year ago. Officials say the slower growth was due to the decline in newly added loans, and that measures have been put in place to lower the lending barriers.
We are offering subsidies to encourage more bank lending to micro companies. Normally, for eligible companies, their extra bank lending will be subsidized by 1 percentage point. Now the State Council decides to increase the subsidy to 2 percentage points. Banks will be highly motivated to lend to micro companies.
Meanwhile, the central bank is also encouraging banks to delay capital and interest repayments by companies and work with them to combat the pandemic fallout.
Our policies stipulate that financial lenders can negotiate with entities in accordance with the principle of marketization. Repayment dates will be extended for loans that are supposed to be paid back before the end of this year. We have noticed that in the last 2 years, banks have gained abundant experiences working with companies, and their awareness of loan payback extension has been improved as well.
Specifically to support small and medium-sized companies to recover from the pandemic, the amount of inclusive loans for them will be doubled this year. And for those SMEs who have financial difficulties to pay back either their commercial or individual loans, the repayment date can be postponed within the year.